morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets are surging higher after China removed the $300 billion cap on foreign investors to purchase assets in China. PTI cites unnamed sources to report that Rana Kapoor is in talks with Paytm to sell stake in Yes Bank. The bank says it will inform the exchanges as and when there is any update on a stake sale, and it adds that it continues to seek investors to raise funds as per usual course. Reliance Capital will be selling close to 3.1% stake in Reliance Nippon Asset Management Company via the offer for sale route. The 262 rupees per share floor price will fetch the company a sum of 505 crore rupees. And Civil Aviation Minister Hardeep Singh Puri says that the government is keen to privatize more airports, adds that India will not lift a ban on MAX 737 Boeing aircraft till global regulators are satisfied. Let's talk about the action on Wall Street first. US equities ended little changed on Tuesday after spending most of the day in the red. The Dow Jones and the S&P 500 eked out marginal gains after a late surge. Abigail Doolittle of Bloomberg News summarizes Tuesday's trading session in this report.
Stocks finished mixed in Tuesday's Wall Street session. Both the Dow and the S&P 500 finished slightly higher. That tech-heavy Nasdaq fractionally lower. This after all three major averages spent most of the day in the red. So a bit of a bullish reversal, suggesting that investors are uncertain. On Monday, there was also a reversal, although it was actually a bearish reversal, moving from the upside to the downside. Small moves overall, but again, some jitters out there on the part of investors. Maybe macro uncertainties continue to weigh. And of course, the big Fed meeting next week. Into that, investors basically trading water unchanged. Now, not unchanged, though, Haven bonds down for a fifth day in a row, the biggest backup in yields for the 10-year yield going back to 2016. So that is somewhat risk on. It tells you investors are moving out of those Haven bonds, that Haven asset class, as was true with the Japanese yen. Interesting when we dive further into what happened for stocks beneath the lid. On the downside, technology, one of the highest growth sectors, was one of the worst sectors, and real estate, one of the big value sectors, high dividends, that was also down the most. So investors selling both momentum and value. That's something, a theme we've seen this week, a rotation. Lots of investors then going into small cap. As for the tech weakness, this really had lots to do, once again, with the payment processors, those high momentum, high valuation stocks, MasterCard, Visa, PayPal, Microsoft, as I mentioned, is also lower. To the upside, though, Apple up 1.2% after they had their product unveil day, showcasing many new iPhones among other products. Investors liking what they saw, again, sending the shares of Apple up 1.2%. As for the best sector, because again, tech was one of the worst, energy up 1.2%, the best sector on the day for a second day in a row. In sympathy yesterday with oil today actually reversed to the downside. Nonetheless, when we put all of this together, risk appetite somewhat neutral to slightly risk on, considering that stocks were overall slightly higher, Haven bonds solidly lower, the yen also lower. Again, so a bit of a neutral risk appetite in Tuesday's Wall Street session to possibly risk on. In New York, Abigail Doolittle, Bloomberg News.
All right, let's also take a look at the Asian markets now. I'm joined live by Rosalind Chin of Bloomberg News, who's joining us from the studios in Hong Kong. Good morning, Rosalind. Do things this morning have to be seen in the context of the change in regulations in China, and how is it looking?
Well, indeed, it's looking pretty positive here in the region at this point, at least. We've got the MSCI Asia Pacific Index up by about just about 0.25%, but mostly green on the boards on the major markets here. Now, yes, we did note that there was a change of regulation in China, opening up foreign investment basically in the stock and bond market, lifting those barriers. It's seen that this could help actually sustain at least a little in the short term the boost for the Chinese equity market. Not so sure about what it's doing for bonds, though, but it could also help stabilize the currency, which is actually near a decade low right now. So right now, those moves are helping the markets in Asia. Shanghai Composite registering just an increase of just about under 1/10 of 1% right now, same with the CSI 300. What is actually interesting today, actually, is a look at Korea, because that market is actually making gains of about 0.6% right now. We've had a few pieces of data out from Korea today. Unemployment level dropping to the lowest in nearly 6 years. In August, falling to 3.1%. Is a bit of a rare positive because, you know, the Korean economy has had quite a few bits of gloomy news of late, especially because it's export-driven. This trade war, of course, isn't helping, and the trade issues as well that it's having with Japan also putting pressure on the Korean economy. We've also had the jump in exports for the first 10 days of August, and we're seeing that those rose 7.2% year on year. Chip exports, though, did fall by down by about 33%. In addition to that, we've had news, of course, of John Bolton's departure as the National Security Advisor to the Trump administration, and some are seeing that as a possibly positive move for Korea. We've got Cho Byung-hun at Wonta Securities in Seoul saying that it spurs speculation that the U.S. may show more conciliatory gestures towards, for example, North Korea, towards China. Of course, John Bolton was seen as one of the more hawkish members of the Trump administration, so there is a bit of a possibly positive look upon that movement in the U.S. political scene there. So pretty much some positively across the board here in Asia. Nikkei, quick look at that, up by about 0.4% right now, and the S&P SX 200 making gains of about 1/5 of 1%. Back to you.
Right. Thanks so much for that, Rosalind. Now, I do want to talk a little bit more about a couple of the things that Rosalind mentioned. The first, of course, was a change in regulations in China. China has taken another major step in opening its capital markets up to the rest of the world, scrapping its foreign investment limit for its stocks and bond markets. Tom McKenzie of Bloomberg News gets you all the details.
This is a change to China's Qualified Foreign Institutional Investor program, set up almost 2 decades ago, that was one of the primary ways that global funds could get access to China's bonds and equities. And essentially what it did was set a quota or a cap for those global funds in terms of just how many bonds and equities they could purchase every year. Currently, the cap is about $300 billion US. That has now been removed. So again, it does allow foreign investors, particularly those global funds, greater access to China's bonds and equity markets. Now, there's a couple of reasons why China is doing this. One of the reasons is to continue to attract foreign capital. The other is because they want to and hope that this goes some way to a greater use of the yuan in terms of international markets, the internationalization of the currency. In terms of the impact, Standard Chartered said, look, short term, you're not going to see a huge tick up in terms of foreign inflows. They point out, and others pointed out, by the way, that in terms of the number, $300 billion is the cap for this year. Only $111 billion has been used up so far. So in terms of inflows, short term, not a big impact. Longer term, most think that it's pretty symbolic and important for China as a way of showing, look, we continue to open up the capital markets, and it should improve the sentiment for foreign investors around China's markets. And of course, it follows on from other moves, for example, allowing foreign banks and insurers to have wholly owned or at least majority owned businesses here on the mainland.
Now, there was a little confusion over U.S. National Security Advisor John Bolton's departure from the White House. President Donald Trump says he disagreed with several of Bolton's suggestions and therefore fired him. And Bolton, on the other hand, put out a tweet that said that he offered to resign. Joe Sobzik of Bloomberg News brings you more details.
Well, you know, the two men actually had a few things in common, a skepticism of globalism and multilateral action, but there are some significant differences. Bolton was very much of a hardliner, one of the leading hawks in Washington. He believed in a robust U.S. foreign policy backed up by the U.S. military. Now, Trump, for all of his tough talk, actually came into office promising to disengage the U.S. from various military entanglements overseas, including Iraq and Afghanistan, and he has been was going to be pulling back from Syria as well. This was one of the major differences with Bolton, who had been advising against things like the negotiations, the now aborted negotiations with the Taliban, and with anything to do with continuing North Korea negotiations. Now, what it means for Trump is that it may be that he moves ahead more with his outreaches to some of those adversaries, including North Korea and Russia, and even Iran. Now, Trump has talked about being willing to meet with Iran President Rouhani to talk about some sort of new nuclear deal that would halt the development or forestall any development of nuclear weapons by Iran. A number of Western diplomats say that Bolton's departure suggests that a potential meeting between Trump and Rouhani later this month at the UN General Assembly might be more likely as a result. So the president, who is fond of the dramatic gesture and has puts great faith in his personal negotiating skills, might be going out further with some of the U.S. foreign policy taking it on his shoulders.
All right, now we'll have to monitor multiple fronts and see how that plays out. For now, let's take a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
We're going to start with South Korea, which says that it will file a WTO complaint against Japan's export curbs on 3 key materials used in chips and display manufacturing. Seoul claims that Japan was politically motivated in taking the steps after a South Korean Supreme Court ruling on wartime forced laborers. South Korea says it wants to find what it calls constructive measures to resolve things through a WTO dispute settlement process. Confusion, meanwhile, surrounds the departure of former White House security advisor John Bolton, who claims that he resigned while President Trump insists he was fired. The notoriously hawkish Bolton left just minutes before a scheduled media briefing on terrorism. The White House says he and the president had been disagreeing on, quote, many issues, with Bolton advising the president against meeting the Taliban. To the UK now, a cross-party group of UK lawmakers says a possible solution to the Brexit deadlock could be a hard border between Britain and the EU in the Irish Sea. Now, that would leave Northern Ireland effectively the only part of the UK still aligned to EU rules. That's bitterly opposed by Belfast and has been defeated before. Bank of England Governor Mark Carney says the continued uncertainty is undermining sterling. To China now. China is opening the door to soy meal imports from Argentina as it pivots away from U.S. farm products in the ongoing trade war. Beijing has traditionally preferred to import raw soybeans and process them on the mainland. But there may be hope for U.S.-China soy ties. Chicago soy futures rose on a report in the SCMP that trade teams are working on a deal that would see Beijing buy more American farm products. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and what's happening in the futures and options space. Agam, we return after a midweek holiday.
Yeah.
How are we looking here in India?
Well, looking all right, and we do know about the strength that we've seen of late in the Indian markets. Of course, it was a trading holiday, so we really didn't see too much activity last Monday. But today we start off on a positive note. Of course, the SGX Nifty will take into consideration all the influences that have taken place yesterday, which was a trading holiday in India. But let's move on and talk about how things panned out on Monday. And as I was suggesting, advances coming through, the broader market indices doing well. The banking indices also advancing, with the PSU banking index giving significant gains. As far as your ADRs are concerned at this point, we're looking at mixed cues, not too much to speak for, except for maybe like Tata Motors. Something like Tata Motors does advance by around 2.5%. Moving on, to talk to you about fund flows. Again, among the many things that stands out in fund flows is, as far as FIIs are concerned, is that we are looking at a relatively smaller figure on a net basis on net sell at at around to the tune of around 188 crores. DIIs, on the other hand, buying. And as I was suggesting, there wasn't as much activity. Contributors-wise, well, Kotak Mahindra Bank has finally recovered after a significantly volatile, tough few weeks for the counter. HDFC Limited, L&T, as well as ICICI Bank, well, keeping the index buoyant. But what about futures and options? How are they panning out? What about the futures? Well, we are looking at a decline of 2%, indicating more short covering for the Nifty futures and Nifty banking futures. Looking at, well, fresh longs for a change after a really long, up 5% in open interest. The 10,800 mark on the lower end continues to remain the one with the maximum open interest. That is a 10,800 put, which will serve as a near-term support. And in terms of changes in open interest, we're keeping an eye on 10,900 put again. Let's move on and talk about the India VIX. That has actually come off to a certain extent. Of course, a positive as far as markets go at around 15.9. And moving on to your Nifty, that's at around 1.4 against 1.3 in the Nifty put-call ratio. In terms of stocks, we're keeping an eye on something like Just Dial. It's shown some strength of late, so we're going to keep an eye on that one. It's up 5%. Apollo Hospitals, CESC, have also seen some amount of traction when it comes to options, futures. And in terms of those stocks which are seeing unwinding, we have Tata Power, MCX, and Torrent Pharma. It's not always that we see Tata Power become extremely active, but there is some amount of unwinding coming through. So we keep an eye on that. The short covering there, as well as MCX, we'll be watching out for these stocks today, Alex.
Thanks so much for that, Akam. Right, let's talk about the aviation space. As the government struggles to find buyers for its debt-laden national carrier, Air India, Civil Aviation Minister Hardeep Singh Puri believes that it is an attractive asset to buy, considering its size and the routes that it operates. In an exclusive interview with Bloomberg Television, Puri also spoke about plans to privatize more airports and whether aviation turbine fuel can be brought within the ambit of GST. Listen in.
So far as our national carrier Air India is concerned, the last part of your question, who would be interested in buying it, perhaps the context needs to be understood. It has 120 planes. 60 of them are owned by the airline. It has 80 domestic routes. It has 40 international destinations it flies to. It has an excellent safety record. And no matter which way you look at it, it's a viable airline, which even in terms of its operating profits this year, it will do well. The only issue here is that governments should not be in the business of running airlines because it has an unsustainable debt. So the commitment to privatize Air India is total. I wouldn't worry too much about the previous attempt to disinvest. Maybe we've learned lessons from that. Why would anybody wish to acquire it? Because of the assets it has and the Indian civil aviation sector with the 7% penetration is growing at the rate of 17% a year. So I think it is an attractive buy. It's not for me on utilizing your hospitality on Bloomberg to try and speculate as to who the potential buyers would be. But, you know, if you were even dealing with information which is in the public domain, you could list any number of them. As to what will happen to the debt, yes, some of it has been retired. Last time when the attempt was made to privatize it, I think there was an attempt to retain 26%. Maybe that was a disincentive. All I can tell you is that the government has what is called an alternate mechanism, which is the group of ministers headed by the Home Minister, of which I am a member. We will meet shortly and we will outline and prepare an approach to the privatization of Air India.
When you look at some of the other infrastructure problems as well, you've got, you know, a lot of chokeage happening at the airports. What about the plans for new landing or parking slots? And also, what about the plans to try and address this massive pilot shortage?
Well, if you have a situation where the sector is growing at 17% per annum, you will have problems both at the airports. But let me give you the good news. 34% of the airline traffic is handled by two airports, Mumbai and Delhi, both of which are in the private sector. We have just taken a decision a few months ago to privatize 6 additional airports, out of which 3 we are proceeding ahead. Look, all this is work in progress. But no one that I know of is suggesting that there are any hurdles as in terms of obstacles there. Yes, when you privatize or you decide to privatize an airport, there will be suggestions that it should remain in state control, or there will be suggestions from a particular state government that they would prefer to do it. And many of our airports run by the Airports Authority are actually profitable entities. So governments are in the business of getting the best possible deal, whether through public-private partnership or privatization. But remember, at the end of the day, it's only the commercial operation which is being privatized. You still have the DGCA, you have the Airports Authority, you have the Ministry of Civil Aviation. So it's a very strong area of economic growth, and we have every intention of ensuring that this process proceeds ahead, whatever the, what may be perceived to be small, hindrances or obstacles coming through the courts or coming from other things. But I think it's well on the way of progressing. You mentioned aviation turbine fuel. I have approached the finance minister. I'm very hopeful that the issue of aviation turbine fuel can be de-linked from the petrol and diesel. You see, most states in India use petrol and diesel to raise revenue. I'm sure it can be de-linked and we will have relief. Many states are individually reducing the taxes on ATF to encourage airlines to fly there.
All right, inflows into equity mutual funds rose for the fourth month in a row in August. And this is all despite the Nifty posting its worst losing streak in 6 years. Inflows into mutual funds were at their highest level in the last 5 months rather. Yash Upadhyay spoke to Amphi CEO NS Venkatesh and began by asking him about the factors that had led to the surge in inflows.
I would say that it is positive, definitely it is positive, but mainly aided by the liquid funds flows, which is somewhere around 79,000 crore the liquid funds have come in. And as you said, the equity numbers are also showing increasing trend over the last 4 months. So I would ascribe it to maybe the maturity of the investors. Maybe the investors are thinking that this is the right time for them to re-enter the equity market through the mutual fund route. And that's where you are seeing the numbers going up, whether it is in the large cap fund or in the mid cap fund or even in the small cap fund for that matter. The ELSS numbers are also showing a positive trend, which is again saying that yes, these people are planning their tax planning in a much more effective manner. They are not timing the market. They are actually putting it every month aside for some tax planning, which is coming through the ELSS route.
Right. We saw for yet another month consistent flows when it comes to the SIP book at over 8,200 crore rupees. A marginal dip on a month-on-month basis, but still fairly, sustainable at the current mark. We've also seen the robust, folio additions as well. What do you make of that?
If you look at the number of folios that have come in this month in the SIP, it is around 3 lakh folios, new folios have added. So that itself shows that the investors' interest has not waned. The interest of the investors are actually there in the markets. And anecdotally, around 92 to 93% of the money goes into the equity market. That means people are coming into the equity market through the SIP route. And that's a good sign, because that shows that there is a maturity for the investors and they are planning for their long-term goals in a much more organized fashion.
Right. Sir, I had specific questions when it came to the individual categories, and there is that bit of a volatility when we look at the flows in the liquid fund category, which almost jumped 75% on a month-on-month basis. Liquid funds are the primary reason we see that big number for the overall mutual fund industry flows. What explains this sort of number?
No, this is a normal thing in the sense that it happens every alternate month. If you see, one month it dips and the other month it actually comes up. But if you want to ascribe a reason, I would always say that the liquidity in the system has gone up. So to that much extent, the corporates and the banks are putting in their excess liquidity into the liquid mutual funds, where they are getting superior returns than any other instrument on a risk-adjusted basis as well. So I think that has shown that jump of around 76,000 crore this time.
Right. And there has also been money flowing into the arbitrage fund. For some reason, for a second successive month, we've seen robust flows coming into the arbitrage fund. What explains the kind of flows, almost close to 5,700 crores in the month of August? What is happening over there?
The arbitrage fund is a good fund to remain invested, because for the simple reason it also plays into the futures and those sort of markets. So it actually acts as a sort of a risk management tool where the downside is protected by the fund manager using the futures sort of markets to hedge the risk. So I think people who have low risk appetite but want a little bit of a higher return are using the arbitrage funds to come in.
Right. And so lastly, before we let you go, for almost the third or fourth successive month, we've seen outflows from the credit risk space. Now, the debt category has been in the midst of, all the bad news for the last 1 year or so. Has everything got over, and is this like the end of the negative flows, or do you see that the category to remain under pressure going forward as well?
But when we see that negative flows, the pace of the negative flow has actually abated. That it means that maybe the people are now taking a view that yes, the credit defaults are coming towards the end of its cycle. I would not say that it is completely ended, but it is coming to the end of the cycle. And they find that there is a better scope for risk-adjusted return coming in there. So that is why some positive inflows have come and the negative inflows are a little bit higher. That's where it is showing the net outflow of around 2,000 crores, which is lower than the last month. So the pace of the net outflow going out is actually abated. So I think over another 2-3 months, it will take time for the people to get readjusted to the new reality.
All right, let's talk about specific stocks now. Somit Sarkar is joining me to tell you all about the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with Indiabulls Real Estate because they have given an update on their divestment plans. So the company has agreed to sell stake in 4 of its joint venture companies. Along with that, they will be also selling stake in their commercial assets at Worli, KG Marg, New Delhi, and in Gurugram at an aggregate equity value of close to 4,400 crore rupees to the Blackstone Group. Now, this stake sale will help the company achieve its target of being a zero net debt company. Now, the deal is subject to closing adjustments and is expected to complete soon. That is what the company said. Yes Bank will also remain in focus because according to various media reports, Paytm owner 197 Communication is in talks to pick up stake in Yes Bank. That is, they will be picking up Rana Kapoor's stake. Now, in its response, Yes Bank said that the news are speculative and the company and the bank continues to explore various means of fundraising activities. Reliance Capital will also remain in focus because according to Bloomberg, the company has called off its sale of its general insurance business to Hero FinCorp. Now, the company was earlier looking to do this to pay its debt. Reliance Nippon Life Asset Management Company will also remain in focus because its part promoter, that is Reliance Capital, has planned to sell nearly 1.93 crore shares or 3.15% stake in the company through an offer for sale. Now, the offer for sale will remain open today and tomorrow, and the floor price set for this offer for sale is 262 rupees per share. JSW Energy would also remain in focus because the company has received a contract to supply nearly 290 megawatt of power for a period of 3 years from its Vijayanagar plant. DFM Foods will also remain in focus because the company has received an open offer from AI Global Investments of around 1.3 crore shares or 26% stake. Now, the offer price made for this is around 250 rupees per share, which is at a discount of nearly 9% to Monday's closing price. Meghmani Organics will remain in focus because the company has set up a new project worth nearly 275 crore rupees to set up a new plant, and from this project the company is expecting a revenue of close to 460 crore rupees per annum. Lastly, Eveready Industries in their response has said that they haven't signed and haven't arrived at any definitive decision on their stake sale on the sale of assets to Duracell so far.
All right, thanks so much for that, Somit. Now, several stories several reports that Somit talked about are available on the website bloombergquint.com, so you should check those out before trade actually starts. But there's also a couple of other stories that you should probably have a look at. First up, fraud hit CG Power Industrial Solutions. Chief Executive Officer K.N. Neelkant has quit from all subsidiaries of the company after pressure from investors mounted. His resignation comes after allegations of irregularities under his watch. And Moody's Investors Service has said that the Reserve Bank of India's mandate to link new floating loans to external benchmarks will limit banks' flexibility in managing interest rate risk. The new rules delay the ability of banks to reflect changes in funding costs of their lending rates since they will be linked to an external benchmark. That's according to Moody's. Well, that's all you need to know going into trade today, but do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.